In the fast-moving world of DeFi, few names carry as much weight as Uniswap, the protocol that transformed Ethereum into a permissionless trading engine and helped define decentralized finance itself. Welcome back to our series, where we break down crypto projects in a clear and actionable way, helping you decide if they're worth your time.
Just a quick reminder, this video is for educational purposes only. It's not financial, tax, or legal advice, and you should always do your own research before investing in any project.
By the end of this video, we'll put Uniswap to the test and give it a final score out of 100. Team and development. The protocol was conceptualized and developed by Hayden Adams beginning in 2017 and officially launched on Ethereum mainnet in 2018 under Uniswap Labs. Over time, governance and long-term strategic direction have increasingly shifted to the Uniswap Foundation and the broader Uniswap DAO, reflecting a conscious transition toward community-driven management. Technically, the team has delivered consistently. The launch of Uniswap v4 introduced sophisticated architectural changes, notably hooks, which allow developers to attach custom logic, a singleton pool manager contract for gas efficiency, flash accounting mechanisms, and built-in native token support. That said, the decentralization of the project remains nuanced. While protocol-level contracts and many governance powers reside with the DAO, Uniswap Labs retains a substantial operational and development role. Off-chain components, front ends, indexers, integrators, remain somewhat centrally influenced. Therefore, the protocol is robustly engineered and evolving, but organizational centralization elements persist. Score 8 out of 10. Use case and utility. Uniswap remains the canonical on-chain AMM for token swaps and concentrated liquidity provisioning across multiple chains. Its utility is broad: permissionless token listings, composability for DeFi primitives, and a foundational role as plumbing for many decentralized applications and aggregators. With v4's hook architecture, the protocol now supports new behaviors at swap time, programmable liquidity strategies, gas-efficient routing, native token flows, meaning Uniswap is not merely a swap engine, but increasingly a modular infrastructure layer. Score 9 out of 10. Tokenomics. The native token UNI has a fixed maximum supply of 1 billion tokens. Recent data indicate the circulating supply is approximately 630 million UNI as of late 2025. The initial allocation distributed 60% to the community, including a 15% airdrop to early users and allocations for liquidity mining, 21.51% to team members and future employees, 17.80% to investors, and 0.69% to advisors, all under a 4-year vesting schedule. The primary on-chain role of UNI is governance. Token holders vote on protocol changes, treasury allocations, and economic parameters. Unlike exchange tokens that inherently capture fee revenue, UNI has traditionally lacked a locked-in fee capture mechanism. The fee switch has been intermittent and governance controlled. However, a recent governance proposal, labeled Unification, seeks to activate protocol fees, initiate token burns, including a proposed retroactive burn of roughly 100 million UNI, and better align incentives between the protocol and UNI holders. In short, token supply is fixed and community-oriented, but dependable financial value capture for UNI holders is still subject to governance outcomes. Score 6 out of 10. Hype versus fundamentals. Fundamentally, Uniswap is one of the strongest projects in DeFi, widely integrated, heavily used, and backed by real technical innovation. The hype comes from UNI itself. Without a permanent value capture mechanism, the token still trades largely on sentiment and governance expectations. The recent unification proposal boosted excitement, but its impact isn't guaranteed until fully implemented. Score 8 out of 10. Market liquidity and volatility. UNI is highly liquid, listed on major centralized exchanges and accessible across decentralized venues, with deep order books and broad listings, providing relatively low slippage compared to smaller alt tokens. That said, governance token status introduces sensitivity. Major announcements, fee switch activation, token burns, legal structure changes, can cause meaningful volatility. Thus, while liquidity is strong, UNI is not immune to macro or protocol-specific shocks. Score 9 out of 10. Security and decentralization. The core protocol has undergone multiple formal audits, and the V4 launch included a large security competition, reinforcing the security posture. The new hook architecture expands the attack surface. Third-party hook implementations, integrator code, and off-chain integrations may introduce heightened risk. Decentralization is strong at the contract level, on-chain governance, transparent code, but certain operational and organizational functions remain more centralized and thus present potential points of centralized vulnerability. The governance initiatives underway via the DAO aim to reduce those centralization risks. Score 8 out of 10. Network activity and adoption. Adoption of Uniswap is mature and global. The protocol is deployed across multiple chains such as Ethereum, Arbitrum, Base, Polygon, and V4 has seen meaningful uptake within months of launch. TVL and swap volume metrics continue to reflect broad usage. The protocol remains a first-choice AMM for token launches, aggregators, and integrators alike. Developer interest in building hook-based extensions remains high. Score 10 out of 10. Scalability and technology. From a technology standpoint, Uniswap has advanced significantly. V3 introduced concentrated liquidity, and V4 brought in singleton design and hooks to improve gas efficiency and flexibility. These architectural improvements facilitate lower pool creation cost, cheaper liquidity management, and richer functionality. That said, the added complexity of hook support means integrators and downstream builders must execute carefully. The scalability gains partly shift responsibility to ecosystem developers. Overall, the protocol remains at the technical forefront of AMM design. Score 9 out of 10. Regulatory risks. Regulatory risk is a material external factor. As a decentralized exchange protocol with governance tokens, Uniswap is exposed to scrutiny, listing regulation, securities classification, exchange operation rules. The unification proposal and the legal entity initiatives by the Foundation DAO reflect proactive attempts at legal structuring and incentives alignment. Until such structural and regulatory clarity is achieved, there remains meaningful uncertainty. This should be regarded as one of the top external risks for the protocol and its token economics. Score 4 out of 10. Self-custody. By design, the protocol enables non-custodial access. Users trade directly from their wallets via smart contracts, and the protocol does not hold user funds. This is a strong virtue in favor of self-custody and decentralized finance. That said, risks remain via third-party, front ends, integrator misimplementations, phishing threats, and the increased complexity introduced by hooks and cross-chain activity. At CryptoVagabonds Academy, we help you build the skills and confidence to protect your assets and manage your own money securely, because understanding self-custody is the foundation of financial independence in crypto. Score 9 out of 10. Final thoughts. Uniswap is the foundational public infrastructure for DeFi. Its technical evolution demonstrates serious engineering, the adoption and multi-chain reach are robust, and its role in composability and token swapping is entrenched. The principal open questions are, will governance and legal structures successfully capture sustainable fee flows and convert them into value for UNI holders? And will the ecosystem manage the increased security complexity spawned by new extensibility? If yes, Uniswap will remain central to DeFi for years to come. If not, execution risk and institutional regulatory pressures could erode its leadership. Final score, 80 out of 100. What do you think? Will Uniswap continue to lead the DeFi revolution, or will the next generation of AMMs rise to challenge it? Share your thoughts in the comments below. Also, don't forget to like and subscribe to the channel for more coin analysis. And as always, stay curious and stay hodling.